Okay, people, right. Second attempt because the last one was far too long and I need to make it much quicker. Um, First video on YouTube. It's only going to be up a short while. It's a request from Jupiter Analytics, JA, okay, to look at Polkadot and have a look at any potential bids that we can get off, right? Because overall, my bias at the moment is that we'll probably will see a short-term relief rally. Potentially, yeah, it will be a very short-term bounce before we see Bitcoin retrace to 32k, potentially 28k. Um, because at the moment there are a lot more bearish narratives with crypto and risk on assets as opposed to bullish narratives. Okay, ETF was selling news, um, and Grayscale, FTX are seemingly dumping Bitcoin shares due to high fees, right? So yeah, um, halving still April time, mid-April. Okay, still a little while away. Um, there is no. We've got interest rate cuts coming up in March, right? Which usually instills a sell-off in risk on assets, right? Um, we've got USDT dominance, which has bounced pretty hard. So people are starting to sideline their capital into USDT. Okay, and we've got the DXY, which is putting in a significant leg to the upside. Looks like it wants to retrace to at least 104s, right? Which would imply people are sidelining capital into risk off, okay, into cash reserves. Interestingly, we have the likes of indices putting in a new all-time high, right? I think we are overbought on indices. I've been trading the Nasdaq. I've been trading S&P and Nasdaq for my Top Step Combine challenge. Okay, and it's odd enough that they're not inversely correlated indices to DXY and haven't been for the last few weeks. Yeah, you don't usually see that. Typically, they are inversely correlated. Anyway, so we're thinking the C's are overbought. I'm probably expecting that we're going to start seeing that begin to sell off soon. Okay, so um, let's look at bids for DOT, right? So we have we have a few levels. Okay, blue lines support, red zones of resistance. Okay, yeah, resistance here. This is a weekly time frame. Yeah, one, two, blown through on third candle, come back, retest, right, come down, breakthrough. Okay, did have capitulation into buyers, came in into force, and then just blown right through again. Right, retested twice, rejection. Okay, right, so that's one. That's a major point of resistance. Another major point of resistance is here, which is which we've got an order block. All right, and we've got this big displacement move down here. If I can find my big displacement move. Right, inefficiency in the market here. Right, sell side imbalance, buy side inefficiency. Okay, right, this is just a fair value gap. Right, advanced fair value gap, which correlates with the OTE model. Okay, search up the OTE model. It is an ICT concept, and I've been applying this to crypto for um, oh god, just under 2 years. Okay, I'm looking at this from a higher time frame perspective. I'm not necessarily, well, living in the UK now, it is very hard to trade derivatives or margin trade or anything, futures trade, crypto. So I wouldn't, I would not be going short here, okay, which you would typically be doing that with the OT model. I would rather look at this as at begin, starting to dollar cost average out at this point or selling off positions, okay. So we have rejection from the order block, okay, as represented by this hammer, right? And I think now DOT is going to enter back into this range that we were seemingly ranging in for 382 days. Okay. Okay, well over a year. Well over a year. I think we're going to enter back into there. And you can see from the RSI, okay, RSI from the point of capitulation, okay, which was, well, point of the sell-off, okay, 2 years that we spent, okay, just under 2 years, just ranging, okay, right, ranging from the RSI, and a year in a ranging marker, okay, just retesting these different levels, right, so I do think that we're going to enter back into this part of the range right between $4.25, $4.20 to $6. Okay, so I think between here is going to be real optimal bids. And if you do manage to catch any bids, and I think 100% do put some bids there, okay, yeah, because it's very low risk, offers a good risk to reward overall for spot bids, okay, you can set your stop loss just under all-time low, because that's what that is, yeah, not leverage trading this, just spot bids, okay, spot bags, and you can ride this way into the bull at that point. So if we have a look what's playing out here, so what do you think this looks like? Okay, this looks like a head and shoulders, okay, bearish head and shoulders, yeah, right shoulder, okay, breakdown, right, we may potentially come retest this level here, which I've got at $6.70, okay, may fill this inefficiency in the market here, okay, this fair value gap, okay, short-term relief, potentially into here, sell side inefficiency, buy side imbalance, okay, before trend continuation, right, it's as simple as that, okay. Whenever you look at price action, treat everything as structure, okay, so we've got another break of structure from this swing low here, okay, it came up, broke from, right, now we've got this level here. I wouldn't be surprised if we have a short-term relief bounce that we've potentially got retail, not stop loss, sticking their stops just right off there, okay, expect that to be hunted, okay, come back into another range of market that I expect for, at least a few weeks running up to the halving, okay, and interest rate cuts, right, so for most people it would be more optimal, you'd be better positioning yourself by just placing bids within this range, okay, just dollar cost averaging, don't need to overcomplicate it, you want to start preserving capital, okay, this is your final opportunity before the full-blown bull run to make a real difference, so that's what I think. Invalidation would be reclaiming these levels, okay, so I'd say more so, I like to look at candle bodies, okay, right, so I'd say start to begin to retest above $6.70, okay, $7, start to break this right shoulder high, okay, yeah, look to retest the head, top of resistance, which was $9.69, yeah, they're all moments of invalidation, yeah, but you'd want to see a significant leg on good volume doing that. All right, okay. What else do we have? We have, okay. So this is Luxargo indicators, it's a paid indicator. I only use this for confluence. Okay, nothing else. I've never ever made trades based off using indicators. I hate using indicators in purely price action with the spice of Elliott wave theory. Right, so we can see that the trend tracer and trend catcher. I think trend tracer is, you can see the red flipping to green. Okay, flipping to green there, flip to red, continuation, slightly flip to green, flip to green. Okay, flip bullish. Right, we've now flipped to red here. Okay, but you can see, I'm pretty sure this might be the trend catcher. It's the red and blue ribbon. Okay, you can see our price just reacts to the trend catcher, right? Which we've now flipped bearish as well. Think of it a bit like a death cross. Okay, and we've approached, well, in the order block, oversold levels, overbought levels. Okay, so rejection from the order block. So there's plenty of confluences that we were overbought and that we did just end up like we did at the top of the bull run here, 2021. Okay, yeah, we were starting to approach overbought levels on the RSI too, right? And in the oscillator matrix, which is another Luxargo indicator. I use all these just to support confluence, and they are pretty good indicators too. Okay, but anyway, so I think we'll end it there. I think for most people, optimal bids absolutely will be, you can see the 12-hour, okay, trend catcher, flip bearish, trend tracer. Yeah, optimal bids back in the range, right? 100%. Look for support to be built. A bottom structure. I think we'll be ranging in here for a little while before putting a significant shift into a full-blown bull run.